Okay, Micron Technology full year 2025 results. So this is the headline. The headline restores gross margin grew by 39.8% as against 22% in 2024. Revenue and operating income both swung sharply higher up the 2023 downturn base. In 2023, if you have been following, you see that they were all negative in 2023, but everything now swung to the upside. Now, this looks like a clean continuation of recovery. The composition of this year's number are not just its size, it's somewhere is where the real story. The composition of this year's number is not just the size, and that is where the real story sits. So let's get into it. First of all, this is our X page. So you go to Apex_invest to download all these graphics for yourself. You can watch on our YouTube channel too and watch the video on X too. So let's dive into the books. So for the income statement side of things, like we normally do, you can download it on our X page. So if you look at the income statement, it's able to overlay the 23, 24, and 25. But this year-on-year changes you are seeing here is for the 23, 24 comparison, 24, 25 comparison. So, but the 23 is to give you the what what the trend is like. So in 2023, the revenue of this business was just $15, but fast forward to 2025, it's now 37.3 billion. It was 15 billion at a time, but now it's 30. So you see how fast it swung when you compare it to 2023. So revenue now grew by 48%. So of course, the business model has started changing. They are into chips making now, so and there is demand for AI. So you have to understand that a business can actually pivot into a new line depending on the opportunity at hand. Then if you compare the gross to, you see that the gross ballooned over 169%. Then look at research and development. Of course, it's supposed to be rising because of as you are doing stuff is rising too. Then if you look at also the operating profit and loss, before that was loss in 2023, finally it's turning more profit in 2020. So 2025 is a good year for Micron. Then if you look at the bottom line too, from loss to small tiny profit, now bad major profit. So that's why you are seeing all these numbers close to 1,000%, because the business job, there was a strong demand, a lot of things added up to, there was also some windfall or tailwind factors that we are not in their control, incentive here and there, we want to talk about it. So you look at the margin, so everything look pretty clean. So it's a pretty clean book for Micron. It's one of the best years they have had in recent time. So let's look at the balance sheet side of things. Okay. And the stock price, you know, that needs there, you see how the stock price, even this year only, it has risen over 900%. So so if you look at the balance sheet side of things, you see that the asset also grew too. Look at the equity side of the equity also grew healthily. Look at the liability also grew. So pretty nice results. Current ratio, even though it dipped, but properly leveraged, debt to equity. So everything just looking up, the return on asset, everything is just looking pretty decent. Then for the cash flow side of things too, you have to know that after relating the cash flow, so roughly the business is having close to 45 billion free cash flow. If you after relating it carefully, then there are so many other things that added to these good results you are seeing. So there is nothing bad to say about this thing, but it's just to tell you what can underpin this. Number one is you have to know that the operations were macro driven. Then they are one of the business which is the the cloud business, which is the cloud business, the cloud segment is the best performing segment. We wrote it here too. It's the best performing segment. Then in terms of geography, their best market too, where we have this demand, the hyperscalers demanding is still the US market. Then they have some regulatory concern from China. For example, the CAC in China, which is the Cyberspace Administration, they placed a ban on some of their chips because of the trade war US had with China in 2025. So it came back here. So that was a headwind. Then the CHIPS Act also in US. US had this chip act incentive if you had the lowering chips, and also they had another tailwind, which is a positive for the business from Singapore. There was a tax incentive from Singapore, so it was a double win for them. Another concern too, which you might not see here that we're speaking now, is that their share-based compensation is rising. So in this business, they reward some of their staff with shares. So the share-based compensation and the share price is rising, so it's somehow consigning. Then the customer too, they have one significant customer, that makes up close to 17% of what they sell. So it's a concentration risk. We wrote it somewhere around there. So one customer account is close to 17% of the 2025 revenue. So it's a concentration risk. So next, what do you have to say in summary? So we are going to publish their key 2026 results so that we see how far they have failed in 2026. So what you are saying is this is a structural cyclical business whose balance sheet currently looks strong because it was riding two simultaneous external tailwinds. One of those tailwinds is the massive AI demand for their chips. Number two is the weight of the government subsidy and the tax timing benefits, which you can layer it on top of a genuine deleveraging effort. So that is just what we have to say about the business. So look forward to the next analysis. So you read up these 2 questions for 2026 is this. So you read it up there. See you on the next one.